BLS jobs report came out today, and it was insanely weak, unbelievably weak. The market was expecting, what was it expecting? 50 to 60,000 jobs gained in the month of February, and it was actually 92,000 jobs lost in the month of February. Not only that, they revised the previous numbers for the last couple of months even lower than they were before. So 2025 wound up being a massively low year, and between 2025 and the beginning of 2026, we are now seeing the lowest job numbers in the 21st century. For the last 26 years or more, we are seeing the lowest jobs numbers. So really weak job market that keeps going forward, or keeps being the story here. And normally when that happens, it means mortgage rates go up. Mortgage rates go down. Normally when there's weak jobs numbers, it means mortgage rates go down, because weak job numbers are deflationary. If people are not getting hired, if they're making less money, then they don't have money to spend on goods and services, meaning that the price of goods and services doesn't get driven up. So weak jobs numbers means that mortgage rates come down, because mortgage rates typically follow inflation. However, mortgage rates are rising today. So why are they rising? If we have this super crazy weak report, they're rising because of the war in Iran, specifically the price of oil connected with what's going on with the war in Iran. I want to show you this. Let me flip this around. This is the price of oil trading on the stock market. You can see this is set for 1 month ago. The price is up 40% from 1 month ago. And even just 5 days ago, the price is up 25% from 5 days ago. That is the thing that is driving this huge, or this lack of a huge change to interest rates. I just watched somebody, I'm going to pronounce his last name incorrectly, but Logan Matashmi or Matashimi, I forget, I have to look at his last name. But he's an analyst for Housing Wire, and it was answering somebody's question of saying, hey, let's imagine that the war didn't start last week. There was no war, and we get this jobs report. Where would mortgage rates be? And he was saying probably 5.875, maybe 5.75 on average with this jobs report. Instead, rates, after having dropped down to just under 6% a week ago today, we are now at 6.1, 6.2% on average, because they have steadily risen this entire week in response to what is going on with the war, and specifically the inflation fears around rising oil prices, because oil floods into everything. The price of oil affects everything because it affects the price of shipping things. It affects the fuel usage by pretty much any company, business, manufacturer that you can imagine. It's going to impact those prices, and of course also impacts the price of gas for consumers. So we will see how this plays out, but unequivocally at the end of this first week after we have gone to war with Iran, the impact on the cost of things for you and I is that they are going up, and the impact on mortgage rates is that they are going up. We'll see what's going on.